So tell me, what do you get when the dollar trades below 99 while the market sits at an 88% expectation of a Fed rate cut this week? Well, I'll tell you, you get a cocktail of anticipation, volatility potential, and a lot of traders pretending to be calm. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where each morning I break down the biggest market drivers across currencies, commodities, and indices, mixing fundamentals, technicals, and just enough logic to make sense of it all. Let's kick things off today with USD CHF, where we can see the dollar index is trading below 99 after two straight weeks of declines. Expectations of a 25 basis point rate cut this week sits near 88%, up extremely sharply from last month's 67%. The conversation now shifts from if the cut comes, how hawkish the cut might sound. Will Powell cut, but warn that 2026 could be a slower easing cycle? That's the question. Meanwhile, Switzerland stands pat at a steady. Swiss National Bank keeps the franc structurally supported. USD-CHF trades at near 0.8036, down 0.2% on the session and down over 8.5% over the year. Analysts even see potential of sub 0.8 pricing into next year. Momentum clearly favors CHF strength for now. Looking at the charts, recent price action shows pullbacks and cooling after overbought conditions. Indicators show overextension unwinding, with price still riding a minor bullish short-term trend line, and the 100-period exponential moving average acting as dynamic support. The next major support level is sitting at 0.801, with near-term resistance hovering around 0.807. If momentum rebuilds, price rotation higher remains possible, but for now, the bias still leans towards the Swiss franc control unless we see a sentiment flip around the Fed decision. If the Fed goes hawkish, watch USD CHF. This pair could wake up really quickly. Moving over to commodities, silver remains one of the strongest stories in the metal market this month. Price has pulled back slightly to around $58, down 0.46%, but still up 14.8% on the month and 81% compared to last year. A mild dip currently, but one that looks more like a breather than exhaustion. Cooling inflation expectations and the anticipation of another Fed cut continues to support this precious metal, especially as non-yielding assets become attractive when rate expectations soften. Inventory squeeze, ETF accumulations, and industrial demand is all assisting in keeping this metal structurally tight at the moment. Silver recently smashed through historical levels and now trades just below its all-time high, with the path to $60 relatively clean, with the bulls remaining confident. Looking at the chart, that breakout above $54.50 ceiling was the ignition point. Price remains above the trendline support as well, and dips are being bought and momentum still leans north. $4.50 now acts as key support, while the next psychological test sits at $60. A move past that $60 mark opens discussions towards $65. But we'll take this climb step by step. Let's finish things off with equities. US futures opened steady ahead of this week's Fed meeting. Traders now waiting, watching, and possibly holding their breath. Nasdaq 100 trades at around 25,795, up 0.43% on the day. And modest weekly progress, as well as a 20% rise over the last 12 months. Earnings from Oracle, Adobe, Lululemon, Broadcom, Costco, and just to name a few, is on the board and loading, but overshadowed by Wednesday's Fed decision. Investors want clarity. Is this the final cut or the third step of something bigger? Soft PCE data on Friday and cooling labor trends are supporting easing, but 2026 forward guidance could shift the tone really fast. Looking at the charts, the index remains elevated but steady. Momentum is there, but restrained. Like someone holding a coffee cup with two hands before the payroll data hits. And that payroll data is the JOLTS job openings report due tomorrow. With price hovering near highs, breakout continuation, or pullback rotation, both sit in play depending on the Fed's language. A break above 25,900 could open the path towards a retest of the all-time high. Alternatively, a break below 25,500 could lead to a decline towards the support level at 25,200. Headlines will likely determine direction more at this point than the technical analysis. That being said, tomorrow could be the day the market narrative changes, depending on how close we get to Wednesday's Fed decision's tone. Will the Fed cut with conviction or cut with caution? Either way, something's going to move. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.